the buyers are out there, and today they showed up in force to bring the market back. And it took about an hour and a half for that to happen. And I think that the market, from a seasonality standpoint, very bullish. You're coming into this month with a pretty good background with the opening of the quarter at 67.25, and I think that you get above this resistance up there about 68.75 area. 68.70 to 75 is a resistance area. Once you get above that, then we're going to challenge, maybe the highs up at 69.53 here in December. But I think it's interesting to watch the Mag 7 in particular. Seems like they favor two stocks every day. And today was Google was one of them. And one of the ones in disfavor today was Apple after making highs. It went up to 188 and then reversed. So you got to be real careful with these Mag 7 stocks. It seems like one's hot and the other one's not, so to speak, each and every day. Hope everybody's doing great. We had a great train and trade today. The lesson was off the charts. And then, of course, 1:30, we did what I call a Cadillac trade. I told people in the live trading, my plan is to diversify with Cadillac trades over the next 3 or 4 days. Great trades to put on in a market that where you've got a contraction of the average true range. And I think that's pretty neat to see that happen. And that's one reason I prefer those type trades. But is everybody here doing okay? And everybody's obviously likes what we're doing. Every day at 11 we meet, then 1:30 we trade. It's sort of a great thing. And Buck just said, I love those Cadillac trades. I've been calling it that for years. And what it means is you should be able to cruise right to victory with those trades. They're very conservative trades, and they're basically defensive trades if you think about them from the standpoint. As long as the time goes on, as long as there's not a major market disruption, they should pay out. That's what I like about them too. So if everybody's good, we'll get started. Join my YouTube channel. Join my free Telegram channel. Get T-Buzz TV every day. Risks involved in trading, past performance is not indicative of future results. And for those that don't know, I'm a former Air Force officer. I think my training on how to think strategically and tactically really pays off as a trader. Active trader since the 70s, former member of Chicago Mercantile Exchange. Speaking of that, our Futures First program is just sell, sell, sell. Futures First, we've added a Delta strategy people seem to be loving. The Delta strategy, or to investigate that. It's really educational and might help you make some money and grow your account. Have 3 books: Winning the Day Trading Game, The Markets Never Sleep, and Trade to Win. And I work with students since 1996, April to be exact, in 1996. At DTI, we help you master the markets through education, training, and experience. In my opinion, the ultimate outcome should be higher prices. If you look at the 7 Sisters right now, we're locked in about 15% on the E-mini. The NASDAQ's locked in about 20. The Dow's up 11.85. I will tell you that the Dow looks to me like there's a bid coming into the Dow. Keep your eye on it. Crude, still negative 17% for the year. And bonds will be in the spotlight next week. 10 tickers, you got Apple greater than 280.55. Went up to 288 today. I'd say that was a pretty good ticker, wouldn't y'all? Just throwing that out there. AGQ, I say greater than 110. It's been up to 115. Diamond 478, gold 390, Google 330, NNE 35, NVIDIA has to get above 185.55 to break out. And PAAS is the silver play above 47.11. Okay, this is a new, very new. In fact, I've traded it now probably, I don't know, say about 10 times, and it's called the anchor trade. How many people here like the way we approach this. Is really a diversified approach to trading. And you get some opportunities in there with the bond market. Now, the bond market is not an easy market, I'll tell you that. But we've got it, we've carved out a little niche in there, and people are loving it, loving it, loving it. Got a master class tomorrow. Our back test shows the anchor trade would pay about 458. Kerry got to see that today. He was with me one-on-one. I did I closed out one today for, I think it was like $428 or something. Not bad. Now, our data shows a winning outcome about 80% of the time. You got to like that. And, if you put 2,500 up, 458 is the average payout. If you put 10 up, it gets a little bit bigger. Great time to have diversification come into your portfolio. This will do it. We all see the headlines. It's all over the board. Inflation climbs to the highest level since January, but they don't tell you it's down quite a bit from last year. Grocery prices have jumped up, and there's no relief in sight, not unless you're buying turkey. Americans are struggling. Prices have been sticky high since late 21. That's the way it always is. Think of the McDonald's sandwich. Always sticks. And the truth is, they probably are never coming back down. With inflation grips the country for years and prices go up, they don't just come back down when inflation slows. Here's that Big Mac example, 65 cents. Back then, $1.60 after inflation cooled, then continued rising through the 90s. Even when it got past it, prices stay at new normal, which means Americans still need more cash flow. And that's what we're about, figuring out different, unique niches in the market to give you high odds trades at the right time of day. But here's the thing. Our income methods are still dependent on the overall stock market. When the S&P is grinding higher, they perform well. When it's shakier in a bear market, that's when income dries up, turns into losses. And what's good about extra income for tough times when it doesn't actually work in tough times? Good way to think about it. This new method is a total diversification from that. It's simple to do, and it's actually much bigger than that. Take 2022, for example. Y'all remember that? When I was short, it seemed like the rest of the world was buying on a dip, even in the midst of a total meltdown in the broad market from March to June. I remember meeting with people at the webinar or seminar there at the Inn Club Lodge. Y'all remember that? Who was there? And everybody's portfolio at the time, because they were buying into what Wall Street was saying, I said, hey, we've known since the fifth day of January not to be buying stocks. The stability factors, the 23.46 opportunity, simple to read. In spite of the chaos in the market, the anchor trade would have played out perfectly back then, $587. And as the April slide continues, study shows another opportunity would pay 22% approximately for income, and that adds up pretty quick, doesn't it? $587. Now, while most income methods hit a brick wall and coughed up years of gains during brutal bear markets, anchor trades would continue to plug along. It's a plug. I call this the utility stock trade of the stock market. A little different. That's why I'm so confident what I'm about to show you, give anyone a real shot at extra income through ups or down markets in the coming months or years. Anyone can activate this trade from any brokerage account. You don't need a special one. With a matter of a few clicks, as soon as the automated system fires off the opportunity, it does all the work for you. Doesn't matter if you have a large account targeting 10,000 extra income, or if you start with 500 bucks and looking to skim $100 at a time with a 58 trillion asset. All you need is a brokerage account and access to private anchor trades, Telegram, a brand new way to target extra income. Anybody use that on a consistent basis? As David said, the anchor trades are great and easy to set up. Now, I'm not telling you quit your job, go all in on the next opportunity. I'm talking about doing level bets. What I'm showing you is meant to be a simple way to target extra income when the opportunity triggers. In other words, unless you got a 7-figure account, this isn't meant to replace your income overnight. It's meant to help you target $458, depending on how much exposure you put out there, or $13.74, or $27.48 if you want to take a bigger bite of the apple. Any regular brokerage account works. That's the beauty of it. And while I never promise any future results, I tell you what, we worked incredibly hard to make it easy to understand, simple to follow, consistent, and a process that once you get down, when the signal occurs, you go into operation. A unique opportunity inside a very complicated market called the bond market. Now, the bond market itself has a lot of interesting benefits. Some we'll get into in a few minutes, but here's the big one most people have no idea. Let me ask you everyone a question. What is the proper price? Here's a question. What's the proper price of the S&P 500? If you said, somebody said to you, hey, how much would you pay for the S&P 500? What's its true value? Let me know if you know the answer to this, but the real answer is it's what the market pays you. Bond prices aren't just what people feel like it should be. They have an objective pricing formula that can either be right or wrong relative to price bonds or trading in real time. There's the formula if you want to use it. Works for every bond out there in the universe. However, we simplified all that. Now, you don't have to get into weeds on what all it means right now. Just understand bonds are unique in that way. Deepest research papers ever constructed from 2014 Journal of Financial Markets makes a stunning conclusion. Empirical evidence strongly suggests that corporate bond market returns are predictable, and they are. There's evidence of return predictability for investment grade and high yield bonds. These results are robust alternative model specifications. Basically, all what that's trying to tell you is consistency and diversification lies in the bond market. And by the way, the AI agrees. Read that. Bond prices are more predictable. It's taken a lot of data to come to that conclusion. Now, we've known fact for years, but we didn't have a real way to capitalize on it until recently, because it gets complicated if you use the actual bonds themselves. But if you use an ETF called TLT, it makes it pretty simple. Running a study on our Genesis bars, you'd look at assets most stable under certain conditions on the purpose of generate income from those assets. And when the data revealed something that shouldn't have shocked us, but it did, the SPY delivered a 51% win rate. QQQ delivered a 48.78% win rate. IWM delivered a 47% win rate. Gold delivered a 52.94% win rate. USO delivered a 56.76% win rate. But here's TLT. This is the ticker we're riding. This is the horse we're riding. This is the one that we're trading in the anchor. And that was the moment we realized we could skim cash flow with a built-in advantage using this $58 trillion mega asset. Remember these words. If you buy at wholesale, and that's what you can do in here, and sell at retail on expiration date, that's a strategy you need to embrace. Buying at wholesale, selling at retail. In fact, after presented those 80% accurate finds, we had them dive deeper and cover nearly 10x the time span under these same conditions, and the results for TLT barely budge, going from 80.7% to 80.3%. It's stable, and it's important. That proved beyond a doubt there was some real magic in this trading opportunity. Now, what we're doing is using that stability to place a special type trade that has the power to pay out nearly 5 times the annual amount that TLT pays in dividends. Let me show you what I mean. On November 11th, we got a full go on TLT, met all the stabilization requirements. It was bullish. The anticipated return on that particular trade was 25%. True stability, direction was bullish, the market checkpoints all met, and 25% enough income to validate the trade. I don't know why everybody here is not a member of it. The anchor. With those fractional lines, we have official anchor trade, which triggered at 12:30 this time of day. Strategy simple. Fires off the exact trade details into the private Telegram channel with step-to-step instructions. You can follow. And from there, as you see, it's pretty stress-free as TLT remained pretty straightforward. Time was working for you, not against you with options. A unique opportunity. You should get a nice payout when these days set up. Let me get you involved with Anchor Trades. Only place to get real-time influence through our private Anchor Trade Telegram. And we consider Anchor Trades both only to our most exclusive members, analyzing all the data. Everybody here needs it. It's a diversification of what you're doing. I don't care how you trade in the market, long-term, short-term, or swing. This is for everyone. Let me tell you why. Anchor trades are designed to work at all different type of market conditions. That means market takes off screaming higher or screaming lower or going sideways. It works in all three conditions. Anchor trades are incredibly consistent with historical accuracy of nearly 80%. That's 4 out of 5. Anchor trades keep losses mitigated so you don't wipe out all your gains with one trade that doesn't go your way. Anchor trades are extremely easy to follow, even for beginners. Anchor trades are small account friendly, with the average trade only costing around $82 per contract. You can become a founding member of Anchor Trades tonight and be there tomorrow for the masterclass where I got some special topic to teach you. It's the only service I know completely dedicated to take advantage of it. Going through data for over 5 years where the market was going up, going down, high inflation, low inflation, and every political change you can imagine. Small account friendly, $458 average one-day income, and a success rate take home and meet your mother. And that's the best part. We made the alerts incredibly easy to follow through in real-time automatic private channel. Our algorithm scanning all this data around the clock, following it for you where you don't have to stay up. And it's really good. Whole host of data, including to find the proper net asset value. We call this heads up because it lets you know where we stand if the trade is imminent. You see the data we're scanning here, low threshold. That's the price TLT would have to break below a bearish anchor trade to trigger. And the high threshold where it has to break through to trigger to the upside. It gives it to you when it posts on the heads up. That's the price that TLT would have to break above for a bullish one to trigger. Here it shows you what the current bias is and even expected options we trade if triggered down there in the left-hand corner. And it tells exactly how likely it is to trigger in the next hour or so you can prepare. Very high. And when you get a trade, it's even simpler. There it is written out. Algorithm automatically posted in the Telegram in real time with exact trade detail. It includes the option strikes, expiration, the current price, and return on investment potential. Follows the step-by-step trade instructions. We'll cover that tomorrow again and set up your own anchor income opportunity. Remember that 80% is key to it. No bracing. I'm sure making trades a full premium service costs about $3,000 a year. We didn't do that. When we account for the tens of thousands of dollars we spend on data to power this, massive computing power that we needed, pretty big monthly bill to keep it up. Our total of $69,597 per year. Not passed along to you. We ate that. What I've shown you over and over how to power these anchor trades, show the power to make $460 in less than 48 hours. Our historic data shows as long as the $58 trillion bond market doesn't go off the rails, we should expect $460 to hit our account within 48 hours. Now open it up for the Anchor Trades founding membership. Here's where you step up to be part of it. Do these trades, follow what we've done, and then you can get aggressive. We'll talk about that tomorrow in the master class. No longer in 2 days exposure. Let me be very clear. I don't know how long we're going to keep these prices the same, but as the results keep happening away, they won't stay that way. First come, first serve at these prices. Don't miss this opportunity to get this ridiculously low founding membership. Now, before I open up this, I have one special bonus you should know about. It's the 30X TLT trade. We have a trade identified out into the future based on the slope of interest rates. It's a 30X trade. We'll call it a moonshot, but I think the conditions exist that make it achievable. Here's the deal. Pay $15 for that option. If it hits, it will pay for your entire, give you the scholarship for the anchor trade. I hope I'm being emphatic by saying, get involved. Make sure you have spare cash to make that bonus trade if you want to. $50 rebate off the anchor trade alerts. We discount down to $445 for the entire. That's right, $444 tonight. Claim your founding membership at dtitrader.com/anchor. Or you can call our team at 904-706-3532 to take it. And as soon as you lock any membership, you log into our one-click portal. You see how to join the Anchor Trade Telegram channel with just a few clicks. Right from there, you get every alert in real time, right to your phone and computer. Now, if you've not used Telegram before, it's easy to use. Heck, I did it. Even we have a short guide in the members area to walk you through getting on Telegram. If you already don't have it on your phone or computer, I got it on all devices. Now, if you paid attention, you know this isn't just another trade setup. It's a special trade setup designed to give you income. And I'm showing the power it works so well because of unique advantages built into the strategy. Now, we probably could charge some more money if we wanted to tell you some other secrets about it, but right now, we want you to be part of it. Founding members get all the details inside the Anchor Trade strategy checklist, the step-by-step guide, all the proprietary rules and guidelines, free right inside the membership portal. Get started now. If you're new to options, we have you completely covered. We got a whole course to teach you on a step-by-step guide, how to trade options T-Buzz style. And if you want to dive a bit deeper in the bond market so you have an even better understanding how anchor trades operate, we're giving Jeff's $297 bond class for you at zero cost. Live masterclass tomorrow at 12:30. Claim your Anchor Trade founding membership, not for $3,000, not for $997, $460, but with that special discount tonight, $445. Can't say no. Folks, I laid it out for you. There'll be a trade as soon as tomorrow. How'd I know? Because I'm going to be with you live at what time? 12:30. We're hedging our bet tomorrow. We're going to take you home. Get on board tonight. Do not miss this masterclass live. Get signed up now. Any questions, type it in here. Jim's averaged $580 on his first two anchor trades. That's over enough money to give him a scholarship for the VIP. Way to go, Jim. Bucks into 30. Pretty nice. This is a very disciplined approach to making money. Very, underline the word too. Double D, discipline and diversification. You got to love it. Any other questions? I'm excited we talked about this tonight, especially when we're doing that masterclass tomorrow. It's going to average, John, about one trade every 5 days. Now, there's some aggressive, a little outside the limits. Once you get some experience, you could take to even do it more. You can actually do it every expiration date once you get some experience. But the computer is set up. Well, thank you, Steve. Thank you, Scott. Thank you, John, for joining right away. Chicken, fish, or steak, baby. Get in. John, you understand what I'm saying, though? It's going to average about one every 5, but once you go through the master class and I show you a couple insights, you can have a lot more than that with the data. In fact, I'm doing a lot more than that right now with the data. Kevin says another interesting twist on growing your account. I like that, Kevin. Way to go, Kevin. All right, folks. This recording was made in anticipation of this masterclass tomorrow, so get involved. I want to thank you for being here. I know that it's going to be a good day tomorrow. We said the market would go higher. It went higher. Now, can it get above that 75 level, the 68, 75 level, and really soar? That'd be fun, wouldn't it? Look at your calendar. Look at what we teach. You'll be on the right side of history. Absolutely. All right, so I want to wrap up. I want to say the following. I will be back in the morning in my TNT room, and I want to thank all the people that joined. We've had a record number of people opening their eyes and realizing you get Anchor, you get TNT, you got everything cooking with gas. And a side note, how many people have heard about the forecast markets? You know, where they have Couchy, you might check that website, but they have these forecast markets, right? I'll spend about 10 minutes tomorrow and get you prepped in 10 minutes what I've learned and using those markets to grow accounts. Kerry and me were talking about it today, and he had a unique perspective on it. And I started working on his perspective. I think he's on something big. We'll talk about it tomorrow. Be there. Thank you, thank you, thank you. Yeah, they're predictability markets, but forecast markets where they say, like, for example, Georgia might beat Alabama. What's the probabilities of that, right? You know, stuff like that. All markets work on key numbers, even the anchor market. Folks, it's been a pleasure being with everybody. I want to thank you for being here. Adam, thanks for putting together a wonderful presentation.
Yep. I'm going to replay the full breakdown that you and Nate
I think you should. This might have been a Oscar-winning deal. It was pretty good. I got going on this stuff. Hey, Kerry said he had a great time with me today. We both had BLTs for lunch, and they were fantastic. And we should have been there. All right. Thank you.
All right, everyone, 1 second. I'm about to replay the full breakdown that Nate and Tom did on the program. So, 1 moment.
Right now, thanks again, everyone, for being here. And today, just as the slide says, we're going to look at a new trading discovery by the DTI team. And what we're going to look at is how one of the most stable assets, a massive asset, gives us this special income opportunity that really is quite unique. Now, a lot of times you'll hear, hey, this is unique. And what they mean is, you know, they use an 8 moving average instead of a 9 moving average. Oh, look how unique it is. No, this is actually really unique. The way that it functions, how the asset works, and then the data behind it, I think, is really powerful. So I'm excited about this. You guys know me. I'm a math nerd. I'm a data nerd. So as soon as Jonathan and the DTI team showed me the stats, I was pretty excited about it. And then as Tom and I have talked about it, I've gotten more excited about it. And we're going to dive in. Now, before we dive in, you guys know the drill. Profits, performance, not typical. Obviously, no one in here is making guarantees or going to say we can see the future. In fact, this is really the opposite of that. We're not trying to predict anything. We're just trusting the data and the edge that we think we found here with the research, which shows about a 79.4% win rate. It's a little bit higher now because we got a winner on Friday, but a little bit higher than that. And then average winner a little over 18%. So that's kind of in that juicy income. We're not going for 100%, but we're not going for 5%. We're in that juicy income range. Average winner is about $458 on a $2,500 stake. And one of the nice things about this trade, which again we'll talk about later, it actually has a lot to do with why the trade works, is how cheap it is. About $80 a contract for the average trade to get in. So if you guys are not familiar with trading risk and all that, you can go to the DTI homepage, but I'm sure most of us in here are adults and we kind of know the drill when it comes to that. By the way, if you guys are here and you don't know me, thanks for being here. I'm Nate Tucci. Tom and I have worked together now for about 5 years, I guess, 6 years. So it's always fun to work with the legend and get to talk about trading ideas. And so a few months ago, I got an urgent report from him and the team claiming they had a new way to find income in the stock market, one that works completely differently than what everyone else is doing. And it's not a matter of predicting some AI acquisition or penny stock. And it's not trying to figure out whether gold or Bitcoin is the real true store value over the next decade. It doesn't even depend on getting a single thing right about any regular stock. And I mean that sincerely. It doesn't matter about a single stock and what your prediction is. Tom claimed that as long as a $58.2 trillion market doesn't go off the rails, his special trade has the power to pay out about $458 in under 48 hours, almost like clockwork. And that's based on just a small $2,500 stake. If you did a 10K stake, you'd be at about $1,832 on average in 48 hours. But really, that's not the best part. Unlike most methods, it literally doesn't matter what regular stocks are doing for this particular trade to work out. So if you go back to August 2024, it's a perfect example of this because you guys probably remember it was kind of similar to last week. We had the S&P get crushed, tore down about 8% in 9 days. And the headlines were brutal. You know, stocks tumble, jobs report, tech rout continues, Dow closes down 600 points, NASDAQ enters correction, weak jobs, stock market coming near crash range, NASDAQ confirms correction as recession fears mount, and then fear, just like I said recently, was on the rise as well. Yet, during that turmoil, which you guys remember, that crazy flush, we got a quote-unquote stable trade. That's what this looks for, stable trade. So you can notice on August 4th, when all that craziness was happening, we had a bullish stability play with a 12.3% income opportunity. And as you can see, that green profit zone is where you make money. It was landed comfortably in there for a stress-free trade. Now, after reviewing the data and placing a few of these trades for myself, I told Tom we need to go live ASAP and show people this breakdown. That's just my last couple of trades, just a couple contracts there, made a couple $100 for me. But before we go too long, let me be very clear here. What Tom showed is amazing. And I've never seen anything that works quite like it. And frankly, I wish I thought of it myself. But just to be clear, there's no guaranteed hacks in the market. Like any strategy, there's bound to be winners and losers along the way. So as I always tell you, don't come into this expecting to hit it big with the next trade. That's not what today is about. Actually, quite the opposite. This research is designed to uncover a significant edge that if it performs like we expect, we can generate a really nice stream of income over time. So we're not trying to go for a millionaire trade Monday or Wednesday or any particular day. It's about how much can we compound a winning edge through good markets, bad markets, and everything in between. And this strategy in particular doesn't care if the environment is bearish or bullish, which means the income we generate on this trade could be a little less white knuckle and a little more coffee on the front porch swing, if you know what I mean. A little more, hey, things look pretty good, a little relaxing versus let me stare down that 1 minute candle and hope it doesn't make or break me. So if carving out a stress-free piece of that $58 trillion market sounds even a little bit interesting to you, well, congratulations, you're in the right place tonight. Because the man behind this discovery is going to walk you through exactly how it all works in just a minute and invite you into the private Telegram where these anchor trades are generated automatically, giving anyone following along the chance to target $458 or more as early as, I should say Monday, as early as the next trading day. So welcome to the Anchor Trades briefing. Like I mentioned, my name's Nate Tucci. Most folks know me from opening playbook or closing playbook, where I'm live nearly 2 hours a day teaching traders. But my students usually know me for my obsession with unique income strategies. That's really what I kind of obsess over, racking up over 230 wins so far this year with close to 80% accuracy across all my different income techniques. And that's why I was so excited when Tom showed me an income concept that I'd never even considered before. It's essentially a way to hijack a certain asset and it flips traditional income on its head. So the man behind this discovery, as you probably know by now, is the legend Tom Busby. Tom got started way back in the 1970s. I shouldn't say way back, Tom. That makes you look old. I should say he's a veteran from the 70s. And since then, he's been featured all over the place. Bloomberg, CNBC, CNN, all the places you would expect. And his books are still one of the most valuable resources that are out there for traders of all levels, whether you're just getting started or you have been in the markets for decades. And much of Tom's success dates all the way back to when he got handpicked to get the Globex terminal, and he was one of only 50 in the world to get his hands on that, which really opened him up to the 24-hour market. Now, that gave him insights to the market that really almost no one else had in the time, and it even helped him manage a firm so successfully that it eventually got bought out for $1.3 trillion by Morgan Stanley. And as you'll discover today, the key numbers that Tom invented all the way back then actually still play a vital role in that new discovery that we're talking about today. Now, Tom is no stranger to helping his students pull cash from the market. We get stories from, his top students across his services nonstop. Like Bruce has said, when I fall, I make money. Tom is committed to helping you. Bob said $2,000 today. Emmanuel said $2,200 on one trade. Keep up the good work. I just pulled a couple random ones out of there because we get a nonstop flood of feedback and testimonials from Tom. But today, Tom promised to show what he thinks could be the most consistent cash flow opportunity that he's uncovered in over 40 years. So, Tom, first off, thanks for doing this on short notice and making your schedule. And second, why don't you jump in here and tell everyone what this is all about?
Absolutely. And one key word in that previous slide was consistency. This is a consistent approach. And Nate, I'm thrilled to be here today and to give everyone a shot at some extra income with this brand new, very unique trade. Our back testing shows this anchor trade would have paid an average of about $458 in extra income on the winning positions. Now, our data shows a winning outcome around 80% of the time. And Nate, $450 using a small $2,500 stake to do the trade. If you put $10,000 in this, you can take it up a level, knowing historic win rate and controlled risk. The average win would jump to $1,832.
Yeah, and I don't want to cut you off right as you get going here, but you did mention risk, which I think people are going to realize is a huge part of anchor trades. And it's actually, it's funny, you don't usually say this on a webinar, but I think the risk part is the part I'm most excited to show people because of how it works differently in this trade. So I'm not going to spoil it right now, but I will tell you, when we say $2,500, we actually don't mean that you lose the whole $2,500 when you're wrong, like most income methods. Most income methods, you throw $2,500 out there, and if you're wrong, your $2,500 is gone. This trade works a little bit differently. So thanks to a special function built into this $58 trillion asset, our risk tends to be dramatically mitigated, which limits the losses, which makes that 79.7% win rate actually a lot more impressive and ultimately creates a much bigger positive expectancy.
That's right, Nate, which is, been doing this 40 years plus in the market, so I can tell you how critical that element will be for folks going forward with this strategy. And I don't think timing for this briefing could be any better after what we saw. You've seen it in the headlines, inflation hits 3%. This is interesting how this news flows. Inflation climbs its highest level since January. Beef prices soar. Inflation continues to linger at your grocery store. All the negatives that come out. Grocery prices have jumped. Americans are struggling. Prices have been sticky high since late 2021. And here's the truth. They're probably never coming back. With inflation grips a country for years and prices go up, they don't just come back down when inflation slows. Because it's slowing. They might dip back a hair, but prices settle near the new levels even when inflation backs off completely. Hey, like the Big Mac, never came back to 65 cents after it tripled in the 80s.
Right. So 80s was high inflation. It went up, but it didn't come back down.
No, it didn't. Instead, it settled around $1.60 after inflation cooled, and then it continued rising through the 90s. This is a great example. I had one of these the other night. I was in shock. Unfortunately, that's just how inflation works in the real world. Even when we get past it, prices stay at the new normal, which means Americans still need more cash flow to cover the higher cost of living, even under the best of circumstances. But here's the thing. Most income methods are still dependent on the overall stock market. When the S&P is grinding higher, they perform well. When it's shaky or in a bear market, that income dries up. And what good is extra income for tough times when it doesn't actually work in tough times? But this new method doesn't rely on the S&P or the overall stock market. It actually is much bigger than that. Take 2022, for example. Y'all remember that. I was short. Even in the midst of a total meltdown in the broad market from March through June, like on February 24th, our data shows the stability trigger would have fired with a 23.46% accuracy. Look at it, $587 in that kind of market. That's beautiful. And in April, as the slide continued, the study shows another opportunity would have triggered ignoring the chaos in the broad market and pushed us toward a more stable opportunity. Look at that one, 549, 21.95%. If you're not getting excited yet, you're not listening. That was when everybody else was losing their IRAs and their accounts to the tune of about 20%. So while most income methods hit a brick wall and coughed up years of gains during the brutal bear market, anchor trades would have continued plug along with a 76% win rate and a positive expectancy throughout the year. That's why I'm so confident what I'm about to show you could give anyone here that wants to take a real shot at extra income through any type of market, no matter what we face in the coming months and years. Because anyone can activate this trade from any brokerage with a matter of a few clicks as soon as our automated system fires off the opportunity. Now, it doesn't matter if you have a large account targeting $10,000 in extra income per trade, or if you started with $500 and looking to skim $100 at a time from this $58 trillion asset. All you need is a brokerage account. You got to have a brokerage account. Can't do this in the dream world. And access the private Anchor Trades Telegram channel. Like in March and April of this year, you could have tried to track all the recession predictions and pulled your money out of the market, risk of global economic recession. Y'all remember this. Reuters poll, economists said trade war makes U.S. recession almost a coin flip. IMF raises U.S. recession risks as tariffs. All that stuff was designed to get you to sell your stocks. Or it could have, you could have ignored all that because while the stock market was anything but stable, there were other opportunities for those that knew where to look. And that's the key, the strategy. Remember, it does not matter if the broad market is stable or not. Anchor trades only fire if our stability metrics are confirmed in an entirely different market. Would have triggered 10 times between March 1st and April 30th, a 21% opportunity on March 5th, a 20% opportunity on March the 7th, a 17% opportunity on March the 14th. A little trend building here, isn't it? Win, win, win. A 17.65% opportunity on March 21st, 22% on March 31st, 23 on April 2nd. Are you getting the drift of this? 20% opportunity on April 7th. I love that 25% one.
And those are the nice ones.
Yeah, that's a real nice one, okay? A 14.94% opportunity on April 17th, a 14.9% opportunity on April 21st. All in all, the study shows we would have gone 8 for 10 in March and April, the same 80% hit rate we expect based on our research in the current market. And even more impressively, while the broad market was down 6% in that span, Anchor Trades would have shown a net return on risk of 82% during those same 8 weeks. Wow.
Yeah, that's pretty crazy. So you just mentioned how tough expenses have been for the average American, 5 years now. We've been saying this since 2021 now, the inflation, the expense. But in the heart of the bear market correction, we're talking March and April, the ugliest months we've seen since, the COVID collapse. Anchor Trades still would have produced an 80% win rate and an 82% net ROI, which means $10,000 in the SPY, you're down $690, right? You're down 6.9%. But in Anchor, on the Anchor Trades, you're up $8,200. That's a pretty big difference. $8,200 or down $690. So massive difference over the exact same time frame. So Tom, can we just kind of slow down and explain, okay, what is actually going on to hand us opportunities that are so different even when that's going on in March and April?
Absolutely. First, let me just say this one more time. This is a brand new way to target income, and I expect it to be the most consistent cash flow strategy we've ever uncovered. I'm not telling you to quit your job or go all in on the next opportunity. What I'm showing you is meant to be a simple way to diversify, to target extra income when the opportunity triggers. In other words, unless you've got a 7-figure account, this isn't meant to replace your income overnight. It's meant to help you target $458, $1374, or $2748 from any regular brokerage account, knowing there's bound to be winners and losers along the way. And while I'll never promise any future results, I can tell you we worked incredibly hard to maximize our wins and limit the losses. Let me give you an example. Last December, the anchor trades were on a hot streak according to the data, a 20% win in December the 4th, a 16% win on December the 5th, a 16% win on December the 11th, a 9.89% win on December the 12th, a 23% win on December the 13th. It was looking like the anchor trades couldn't lose. But on December 19th, on a perfect setup, the safety net was breached and the trade turned into a loser. But the beauty of this trade is that we didn't cough up all our gains on previous trades on that one. We lost 16% on that one. Now that ought to give you a little comfort when you're thinking about using this approach. Which means when we add up the 6 December signals from our back test, even include the loss, it still gave us a net gain of $1,406 on a level 2,500 cent stake.
Yeah. So, I mean, I love that example because it shows, kind of like we hinted at earlier, even when things don't go your way, the strategy still has the ability to work. It doesn't blow it up on one. So that's 70% ROI you just said on those numbers over those 6 trades on the risk in 1 month. And that's including the losers. So that's not saying, oh, here's a cherry-picked month where we didn't take any losers. It's saying here's a month where we won 5, lost 1, and we still netted out 70% ROI. And as you hinted, there's a very special reason the risk tends to be far more mitigated than most income strategies, which we'll talk about here in a moment. But Tom, there's something even more impressive about what you just said. During those examples, once again, the market was actually in really bad shape because December was a wrecking ball for a lot of people's portfolios. You guys might remember we got the Trump win, the election in November. The market ripped up in November and then gave everything back in December. Everyone thought December was going to carry on the momentum. Market was going to have a huge Santa Claus rally, everything else. Instead, it turned around and people got crushed who doubled down after the November win. So to your point earlier, most income methods are still dependent on the overall market not crashing and burning. I'm not afraid to admit I'm in that camp. I'm mostly bullish. Yet during that stretch, these anchor trades would have delivered 6 out of 7 wins, 86% hit rate, and a huge net positive. And that's on those charts that I just showed you, with the whole market going backwards and giving up everything. So if I'm understanding you correctly, folks could have completely ignored all that chaos, not even tried to predict the broad market or pay attention to any headlines. And if they had access to the private Telegram, they could have followed the exact instructions all month long, which a study would have showed about $3,500 in net income for every 5K, including winners and losers. So how is that even possible?
Well, Nate, that's exactly right. And it's thanks to the discovery we made years ago and have been optimizing ever since. You see, as I keep hinting at, we're not trading the regular market at all. We made this unique discovery inside the $58 trillion U.S. bond market. Now, the bond market itself has a lot of interesting benefits. Some of them we'll get into in a few minutes, but here's the big one most people have no idea about. Actually, before I tell you, let me ask everyone a question. What is the proper price of the S&P 500? What is its true value? Let me know in the chat what you think the answer to that one is.
Yeah, everyone let us know. And then, well, here, I'll answer. So I would say the S&P doesn't have a proper value, doesn't have a calculated value. I'm curious to see what people say in the chat. I would say just like any asset, it's supply and demand. It's worth whatever people decide it's worth on any given day is what the S&P 500 is worth. I mean, we could see the S&P get bad news.
That's probably the most honest answer I've heard in 40 years of trading. It's worth what it is on the day it swaps hands.
Well, and we know that listen, that we could get good news that we think makes the S&P more valuable, and it could go up, or opposite, it could go down. Just like recently, we got good news and the market ripped and sold off 3%. So I would say there's no true or correct or scientific answer for the value of the S&P.
Nate, you're exactly right, except for one thing. You said that that's true for any asset. And while it's correct for just about every asset on the planet, bonds are uniquely different. Most people are confused by bonds. You see, bond prices aren't just what people feel like they should be.
Yeah.
They have an objective pricing formula that can either be right or wrong relative to the price bonds are trading at in real time. Here's the formula. Everybody got that?
Yeah, everyone write that down.
Write that formula down. Now, we don't have to get into the weeds or what all this means right now. Just understand that bonds are unique in this way. That's why one of the deepest research papers ever constructed from the 2014 Journal of Financial Markets makes a stunning conclusion. Empirical evidence strongly suggests that corporate bond market returns are predictable. There is evidence of return predictability for both investment grade and high yield bonds. These results are robust to alternative model specifications, return measures, and exclusion of extreme observations. And by the way, AI agrees. Here comes artificial intelligence.
Yeah, it says right there.
Prices are more predictable than stocks.
Yeah, interesting.
Now, we have known this fact for years, but we didn't have a real way to capitalize on it until recently. You see, a few months ago, we run our study on our Genesis bars, and he was looking at which assets were most stable under certain conditions for the purposes of generating income from those assets. That's when the data revealed something that shouldn't have shocked us, but it did. Under identical conditions, looking for stability, the SPY delivered a 51.22% win rate. QQQ delivered a 48.78% win rate. The IWM delivered a 47.37 win rate. Gold delivered a 52.94% win rate. USO oil delivered a 56% win rate. Now TLT delivered an 80.77 win rate. Remember, that was the moment we realized we could skim cash flow with the built-in advantage of this $58 trillion mega asset.
Yeah, well, let me jump in here because those numbers actually are stunning. For anyone, if you guys in here, if you've done a lot of testing like I have, I do testing all the time, you don't just see massive leaps in performance like that from the very same conditions. And what's really interesting about your data is you can tell it's actually not a fluke. For example, you guys can probably follow this. The assets we know are traditionally less stable, like small caps, IWM or the NASDAQ, well, they were also less stable. They were the lower win rates. The S&P was in the middle, kind of middle stability. Gold, more stable, did a little bit better. And then there's TLT at the top of the list, which represents the $58 trillion bond market, just absolutely blowing everything else out of the water by a huge margin up. So you said we shouldn't be shocked, but I have done enough data analyzation to be completely shocked that one asset under the exact same conditions could be that much more profitable.
You nailed it. It's not a fluke at all. In fact, after Jonathan presented those 80% accuracy findings, we had him dive deeper and cover nearly 10x the time span under these same conditions. And the results for TLT barely budged, going from 80.7% to 80.3%, even as the data set completely changed. That proved beyond any doubt there was some real magic in this particular ticker for this trading opportunity. And as you know, Nate, from there we have been automating this brand new opportunity so traders can take full advantage of it.
All right, so we now realize that most people have no clue how unique bonds are compared to the regular assets we trade. Completely lost on people. I will admit, lost on me as well. Never even considered trading bonds differently. And now you've shown us that using bond stability to your advantage creates one of the biggest outsized advantages that I've ever seen. But what is actually happening? So we know, okay, 80% versus 52, it's stable, it's 58 trillion, but what are we actually doing? Are we holding TLT and collecting a 4% dividend at the right times? Like what is actually going on?
No, not at all. You see, well, most of the $58 trillion in the bond market is doing just that, using it as a safe haven to collect 3 or 4% a year we're not interested in that at all. What we're doing is using that stability to place a special type trade that has the power to pay out nearly 5x the annual amount that TLT pays. That got your attention, didn't it? In one day.
Yeah.
Let me show you what I mean. On November 11th, we got a full go on TLT as it met our stabilization requirement. Said it was bullish, which means it's going up. And then the trade is entered, okay? And you do the trade, and large enough income threshold at 25% to validate the trade. When these factors align, it means we have an official anchor trade which triggered at 12:30 p.m. Now, the automated system fires off the exact trade details in the private Telegram channel with a step-by-step instruction. And from there, we just wait for the TLT to remain relatively stable to collect that juicy income in under 48 hours. As you can see here, this is one pretty stress-free way to take money and grow it, as TMT remained great.
Yeah. So let me jump in one more time here. Probably not one more time, probably a few more times to be honest, but 2.5K on that one. You're making $625 in under 48 hours. Again, you showed us what, like 8 or 9 so far under 48 hours. And once again, didn't seem to care what was going on in the broad market. What didn't matter for that trigger at all. It's just a matter of what happens with that particular asset and those particular conditions.
Yeah, not at all. And it's really the beauty of this brand new opportunity. I'm not trying to predict anything. We're playing the numbers. All I care about is tapping into the specific market when the stable conditions are confirmed and skimming along some income off the top when these trades work out. Remember, there's about $58 trillion in this bond market, and as long as this uniquely massive market doesn't go off the rails during our trade, we should collect a nice payday within a day or two. Not a long time hold, within a day or two. And take the September 16th trade where we picked up $476. It stayed in the green area. We'll call it the green room. I like that. Anchor income achieved right there for everybody to see, $476. This already got your attention. As long as it doesn't go off the rails, we expect to claim our income. You see how wide that is? It gives you a wide range for you to end up profitable. And all we're doing here is using a special type trade that this asset supercharges. You see, when most people think of options, they instantly think direction, usually buying a call or put, the way I think about it. But in an income trade, it doesn't work that way. Instead of buying a call and needing the price to go up a certain amount to make money, an income style trade uses a simple spread to create a profit zone. And as long as the option expires above that level, the trade pays out a profit. And if the price finishes below that level, it turns into a losing trade. So you probably can already see why a stable asset is ideal for this style trade, right? If it's stable, it's going to stay in the green room, the less likely it is to torpedo below the profit zone. Thus, the more wins you're likely going to have. And Nate, that was the massive breakthrough on TLT. We ran the numbers using our proprietary trigger. TLT was dramatically more stable.
Well, Tom, it does make perfect sense. I mean, just look at that September 16th trade you showed us. Your TLT position barely budged. You guys see how much room there is and how little those candles moved relative to that range. It never even got close, about as stress-free as it gets. But here's the crazy part. If you took that same position on September 16th, but on the SPY, it looked quite a bit different. Here's the SPY, okay, same day that trade triggered for you on TLT. You could set up the same kind of income trade, right? You got a nice big fat zone on there on the SPY. Plenty of room to stay in the green room. I'll use your terms. Plenty of room to stay in the green room there. But while TLT remained totally stable and delivered an easy win over the next 48 hours, SPY didn't look so good. Not so stable on SPY over the same 48 hours. So we're talking about the same type of trade in the same conditions at the same time, but one is a massive loser and the other is a stress-free winner that never even got close. And that's a huge difference.
That's the beautiful thing about it.
Yeah, well, it's a huge difference. I mean, especially if you go over the data, over the long term, like your win rates were showing.
Right.
But the stability is really only half the trick based on the notes we have from you and Jonathan. Is that right?
That's correct. Exactly right. Part of the reason TLT is so effective is a kind of a silly advantage I've never even considered before. Believe it or not, the underlying price of TLT being so low relative to massive size plays a key role in why this trade is so effective? Let me explain. Remember, the bond market itself is about $58 trillion. The TLT reflects the bond market's 20-year pricing, like how gold reflects gold's price. GLD reflects that. But TLT is priced under $100 per share, which means if the bond market loses $250 billion in value, has a real bad day, it's equivalent to TLT dropping only 36 pennies. Follow that math. And this helps our income trades because it makes TLT even more stable in practice. For example, just recently on Monday, November 10th, the market had a major rally with news that the government shutdown should be ending. Y'all remember that, right? The chart below with the SPX showing the reversal and huge jump in S&P 500 on the news. If we zoom in, we can see how the S&P actually worked out. It closed at 67.28 on that Friday, and it closed at 68.32 on Monday, which means it moved $104 in just one trading day. Now, before we dive a little bit deeper into why that's so important, let's compare it to TLT on the same day. TLT closed at 89.57 on Friday, 89.55 on Monday. The 2-cent movement on TLT compared to the $104 movement on SPX is a lot more like a Cadillac trade than it is a race car trade. Now, of course, that's a pretty extreme example, but it's meant to show how different the TLT can operate compared to the rest of the market.
All right, so let me jump in because this is the math stuff I love. This is where I got convinced when we actually went through the math on this. And it goes right back to your explanation of that income style trade that we just talked about. So you're not saying the bond market doesn't move. In fact, we've seen it trend nicely over the last year. We're not saying it doesn't move. What you are saying is that the bonds have a distinct and unique advantage because of this TLT trifecta. Number one, it is massive and hard to move. So it might move 36 pennies when the SPX moves $100. It's one asset class that's much bigger than the entirety of the stock market. So it takes a lot to move $58 trillion and kind of push it off the rails during your trade. That's why even in an apples to apples comparison, TLT moves about 40% less than the S&P 500 on a day-to-day basis. So even if you shrink it down and go by percentages, it still moves a lot less. Number two, its underlying price increases the advantage. Not only does TLT move less on relative terms, like as a percentage, but it moves way, way less in real dollars because of what you just said. The price is really low. So it moves very, very little. And then number three, it's more predictable and stable. Top level research shows the bond market is more mechanically predictable. And then your own research shows it's way more stable under the exact same conditions as these other assets. So those are the three I think we have. Is that all right?
Yep, that's right, Nate. Let me walk you through why that trifecta is so incredibly powerful. Remember, income trade uses a simple spread to create a profit zone on the chart. And that's that green room I'm talking about. Anything above that zone equals profit. Everybody understand that, right? In the green zone, you've got profit. In the red zone, you got loss. But we're not just taking a coin flip trade looking for it to make a move to our side of that profit zone. We only take a position when our proprietary signal fires on TLT, which means the price is already well into the profit zone. So we need the TLT to make a move in our favor to win the trade. We don't need that. It's already in the winning position with time going by, plenty of room to spare. We simply need the $58 trillion market not to go off the rails in order to collect our premium. And as long as the price stays anchored to its expected value within reason, we're looking good, which is our data shows happen about 80% of the time when the signal fires.
Yeah, I think it makes so much sense. When the asset is already in position to profit, that trifecta means, hey, it's really stable. It's very unlikely that it's going to break you when it's already in that position. You're not talking about giving it weeks or months to make a move. You're talking about less than 48 hours. So again, you're just kind of stacking up all these advantages. It's stable. You're already in position. It's already there. Your trigger hits, and you're not giving it a lot of time to move away. So you're not kidding when you say it has to go off the rails in no time flat to create a losing scenario. And so I got to admit, as an income guy in my own right, I really love what you've done here. I think this is one of the coolest trades that we found because it is so different and unique from other income techniques.
Well, Nate, we've been hard at work trying to find these unique opportunities. When this one came on the scene, it that people can execute within a ton of confidence for all the reasons we're talking about. Confidence is important in trading, but I'm glad you brought up what it takes to cause a loss, because that is where things get even better on anchor trades. You see, most trading strategies or income methods I know of have one really major flaw. They do a great job picking up winners with a high hit rate, but when they do eventually take a loser, right, the losses can wipe out all your gains. That's happened to me many times. There's nothing more frustrating than that. I am sure all of you have been there and you know exactly what I'm talking about. But part of the secret sauce of the anchor trade is the following. We should never take a 100% loser.
Yeah.
As a matter of fact, this is the biggest advantage of the underlying price of TLT. And most people have never been trained on this. Let's go back to our chart one more time. I want you to see this picture. That yellow line represents the point which a trade flips from being a winner to a loser. Everybody see that? Give me a yes. Everybody see that? Where it goes from green to red. In reality, that's not quite true, but that line is actually a range of two options we're trading. It could be 50 cents wide or $1 wide or even $5 wide. Now, most people don't really care about the range because it's very narrow relative to price, meaning that the price can easily cross from one side of the line to the other side, like you see here. For example, the SPX is priced around $6,800 and uses $5 wide spread. So the range is about 0.07% wide. That means a typical 1 minute candle will cross back and forth through the entire range with no problem. Winner, loser, wears you out, doesn't it? So on the SPX, it acts like a clean line. But TLT is different. Our trades are $1 wide, which is a move of over 1%, a massive move for TLT. And that's absolutely critical, because it means that our trades don't go from the profit zone here to out of the profit zone here. That's how most income strategies work. On one side of the line, you win, the other side, you lose every penny. But our trade takes advantage of range by giving a trade a lot more room where it can roam. It still has value. And this is part of the secret sauce that makes this whole system so much more profitable. Because it means on the rare occasions when it doesn't work out, which does happen, we're not wiping out the entire account. Instead, that's a manageable setback. Look at this. Look at this. This is unbelievable when you just sit back and look at the difference of keeping the risk. I always tell people to worry about the risk. The wins add up a lot faster.
Yep.
And to make it easy where you don't have to manage that range I just described, I'll give you a clear stop loss rule on every trade, right from the beginning, before you even make the trade. As I've showed you, the entire bond market has to make a pretty huge move to put us in the danger of hitting our stop loss.
Yeah, so I absolutely love this. Me and Kane were talking about it too last week, and I definitely agree. Most people will never learn about how that range works. I've listened to 100 presentations. No one has ever explained how to use the actual range. And you guys can let us know in the chat if you agree. I've never heard someone say, well, then we have this middle zone that can also be used to our advantage. Now, of course, there's a good reason for that. For most strategies, it doesn't even tend to matter a whole lot. But the way TLT is priced, wow, I mean, you can literally see that completely changes the game. You have an entire 1% extra cushion there where the trade has still value baked in. So I'm sure a lot of folks in this room are newer to options. They're not even sure why that matters so much. This might be pretty new to them. They may not even understand what we mean when we talk about a 50-cent wide or $1 wide. That might be new. But the beauty of Ton's system is that you don't have to understand all the nuance of how the options work. It spits out these dynamic trades in real time with the exact instructions to follow, so you don't have to figure out what range or anything else. All you really need to know is this pricing loophole can help not just keep the win rate high, about 80%, but also keep the losses small. Guys, if you can keep the win rate high and the losses small, you're going to be onto something, which is probably even more critical over time than the win rate. So, Tom, now that we've seen the power of anchor trades, let's get down to brass tacks. How do we get our hands on the very next opportunity?
Well, the only place to get the real-time income alerts is through the private Anchor Trades Telegram channel. Until now, the only members in that channel are my medallion traders who are paid north of $25,000 to be medallion to access all of my behind-the-scenes type work, and I've considered keeping anchor trades available only to my most exclusive members. But after analyzing all the data and completing all the research, our team concluded this is a trade that everyone here tonight should have access to. Even if you got buried losses from years ago, you ought to be thinking, I finally see a trade that I can do and not blow my account up. Let me tell you why. Anchor trades are designed to work in all different type of market conditions. We have those. Anchor trades have been incredibly consistent with a historic accuracy rate of nearly 80%. Anchor trades keep losses mitigated so you don't wipe out all your gains with one trade that doesn't go your way. Anchor trades are extremely easy to follow, even if you're new to options, even for beginners. Anchor trades are small account friendly with the average trade cost around $82 per trade. That's why today you can become a member of the founding family. I'm going to call it founding family of Anchor Trades Income Alerts. This is the only service I know that's completely dedicated to take advantage of this unique income opportunity in the bond market. And after going through nearly 5 years of data, which takes into account the bull markets, the bear markets, up and downs, high inflation, low inflation, and every political change you can imagine, the final study shows small account friendly, 82 per average position size, $458 average one-day income based on a $2,500 investment, and 80.3% success rate with built-in risk mitigation. And the best part is we made all the alerts incredibly easy to follow. Nothing hard about this. If you can read a basic sentence, you can do this trade. We made the alerts incredibly simple to read, automated it, Anchor Trade private Telegram channel. Our custom algorithm scans TLT 24/7 looking for anchor trades. It's pulling in a whole lot of data, including defining the proper net asset value, along with our proprietary reference levels. Every day at 12:05 Eastern Time, the algorithm pushes an update into the Anchor Trade channel. We call this a heads up because it lets you know where we stand if the trade is imminent. You can see some of the data we're scanning here, like the low threshold. That's the price that TLT would have to break below for a bearish anchor trade to trigger, and the high threshold. Look at the difference, very small difference on that, less than $1. And that's the price TLT would have to move. And it shows you what the current bias is and even the expected options trade will take if it's triggered. And my favorite here, it tells you exactly how the trade is to trigger in the next hour or so you can prepare. You're not sitting there staring at a screen. And when you get a trade, it's even simpler. The algorithm automatically posts into the Telegram in real time with exact trade details. It includes the option strikes, the expiration, the current price, your ROI potential, etc., everything you need about a trade automatically. You can follow this step-by-step trade instruction and set up your own anchor income strategy. And remember, every time one of these alerts fire, it's the same criteria. Our study shows would have hit with an incredible 80% accuracy.
Yeah, so the Telegram makes it really easy to follow. That's what I've followed the last couple of days, and that heads up where you kind of know what to expect. Hey, here's what we're looking at. It's likely or it's unlikely. And then you mentioned you expect this to be the highest performing income trade in your arsenal. I mean, that 80% win rate. So until now,
you said, Nate, let me just interrupt you. What you said, and the difference this trade is the risk side of the equation.
Yeah.
The risk side is so small relative to other income trades.
Yeah. Well, like you said, until now, only the medallion members have been allowed in that Telegram channel. So I think we're braced for impact, as they say, on what the cost for Anchor Trades Alert is going to be.
No bracing required. I'm sure I can make Anchor Trades a full premium service that costs approximately $3,000 a year to be included. It's worth it, especially when we account for the tens of thousands of dollars we spend on data to power the automation. The $57.98 is the monthly bill for just one of our data feeds, right there. All the computer such there, or a total of $70,000 per year. But don't worry, we're not going to pass that $69,576 annual bill to you. Today, we've shown you over and again how these anchor trades have shown the power to pay $460 in less than 48 hours. Obviously, I can't predict the future, and I can't guarantee our next opportunity will be a winner, as we've said in a dozen times. This is the long run play. Our historic study shows that as long as the $58 trillion bond market doesn't go off the rails, we should expect that $460 to hit our account within 48 hours. So I'm going to open up Anchor Trade's founding memberships right now. Get ready, folks, for just $460 per year. That can't be right. $460 per year. And my hope is our first alert gives you the chance to pay off the whole year, put you in scholarship form for the next 100 trades you do. Now, let me be clear. I don't know how long that price will last. I'm not guaranteeing a certain amount of spots. It's first come, first serve that wants it. So if you want to make sure you don't miss your chance to get in one of those family spots, do it tonight. Grab this ridiculously low founding membership and we'll open up access. I have one special bonus you should know about. Inside the members area in a report simply titled the 30X TLT trade. Now 30X means what? It means 30 times your risk. It's a longer term trade on TLT that costs about $15 per contract and pays over 30X reward. Now, of course, it's a low probability moonshot trade, but I think the conditions exist that make it achievable. And here's the deal. Just one tiny contract at a cost of $15 would pay for your entire membership if it hit. It would turn about $485 in profit on the moonshot trade. And that's what I'm hoping for with this outsized trade opportunity. And just to make sure you have the spare cash to make that bonus trade if you want to, I'll give you an instant $15 rebate off the Anchor Trade Alerts membership. So you can join tonight, $445 for the entire week. Not kidding, for the entire year.
For the entire week. I love that.
Claim the founding membership right now, dtitrader.com/anchor, or you can call our team at 904-706-3532 if you have further questions. And as soon as you lock in your membership, you can log into our one-click trading portal, and you will see how to join the Anchor Trades Telegram in just a few clicks. Very simple, not hard to do. I can follow it. And from there, you get every alert in real time right to your phone or computer. Now, don't worry if you've not used Telegram before. It's very easy to use. We even have a short guide in the members area to walk you through step by step how to get on Telegram if you don't already have it on your phone or computer already. Now, if you paid attention tonight, you know that this isn't just another trade setup. It's a special one. Anchor Trades have shown the power to work so well because of unique advantages built into this strategy. I'm sure we keep those secrets behind closed doors and charge another $9.97 for access to the strategy itself. But of course, founding members will get all the details inside the Anchor Trade Strategy Guide. This is a step-by-step guide that reveals all of our proprietary rules and guidelines. And it's included for free inside your Anchor Trade sign up for founding membership. And if you're new to options, we have you completely covered. Inside your members area, you can find a step-by-step video on how to place these income trades. And if you want to dive a little bit deeper into the bond market so you have an even better understanding how Anchor Trades operate, we're also going to include Jeff's 297 bond class for you at zero cost for members.
Well, Tom, it looks like you have definitely loaded everything up possible. I mean, it does look like a $3,000 membership, as you mentioned, the alerts, the strategy, the training, all the stuff in there for $445. We should have done the monthly deal. That's what we should have said. Do it for 30 days, see if we hit a few winners, and then have everyone upgrade. But I guess we'll do it for a year, and then
tonight we'll do it for a year. We're going to talk about that, Nate, because this is so valuable. We'll do it tonight for that price. That's what we said.
Yeah. Well, there you go. Well, I can't wait for the next one. I'm 3 for 3, by the way, Tom, on these from firing in the Telegram. So yeah, I'm ready for the next one.
I did 2 for 2, and I said to myself, and I started looking for it. I looked at my watch. I said, I got to go check that trade out, and I did, and there it was. I did it again, and I couldn't believe the price. I actually got in on the last one at 61 cents.
Yeah. Well, remember, you guys don't have to be a 25K medallion member anymore to get access. Founding membership is insane discount, $445. That price is correct, with the goal that the very next signal hopefully pays off your entire year. And it'd be pretty nice to have the whole year paid off in 48 hours, like the research showed happened on September 3rd or July 11th, or this one on June. I mean, look how safe most of these trades are. It doesn't mean that all are going to be like this, but look at May 7th. It never even got close to that. I mean, here's February 5th. You got a little bit of lower movement. Look how how easily that one fished. I mean, over and over and over again, these trades are so solid. Plus, Tom's giving you the 30x TLT trade report. By the way, I'm in this trade as well. I've got a whole bunch of contracts of this 30x trade. So, Tom, fingers crossed we get that.
Absolutely.
I think 2026 could be a heck of a year for
I do too.
for TLT. So I think this trade could really cook as a bonus. $15 if we hit it. Hey, that'll pay for the membership. So hopefully you pay for the membership on Monday or Tuesday if we get a trade. But hopefully you also pay for it with the $15 trade on the 30x. Plus you get the strategy report, you get the other bonuses, you get the Jeff bond class. So I mean, hey, we waited until November, but we really got the no-brainer of 2025 done for you guys here at just $445. So if you haven't grabbed your spot yet, do it now. It's ridiculous. It's the most obvious no-brainer we've probably ever done. This, by the way, Tom mentioned that data feed that powers the algorithm. That's just one of the data feeds. That 69 grand is just one of the data feeds that we have hooked into here. The overall cost, I mean, me and Graham have run through them before. There's several $100,000 of data just to do the testing and then the real-time commercial data feeds to put these out. So you're getting access to something that has 6 figures worth of development back end into for $445. It's a pretty good deal. So take advantage of that. One of the big questions we got is how often will it trigger? Tom, I know you're going to teach them how to get some bonus trades out of that. I don't want to spoil that for them, but I noticed on the test it was about 5 times a month was the average. So one a week or so. Typically, you could take some bonus once you learn a little bit more. And Tom, I know you kind of twisted around with some of those bonus trades over the last week. So I'm not sure if you're planning on teaching people that or if that's just for you, but they could get some bonus trades.
Yeah, absolutely. Everybody knows that we're going to make sure we work at it together, but I'm really excited about this, folks. And I think that the numbers speak for themselves. If you're here to learn, you're here to have something in your account that diversifies the standard up and down of the S&P, this is your trade, because what it's going to do, people always ask me all the time, Tom, I'm worried about the market. Here's something that you can do to diversify your account and have it working for you when it fires. It's easy to read. That's what I like about it. It's so clear. It's simple. It tells you, here's the option you're going to buy, the time you're going to buy it. You got all day to buy it. You don't have to buy it once it figures. You just get in at the price and you put it on the day of when it triggers. You got all day. So it's not like you got to call an ambulance to get you to your broker. You know, it's right there for you. Okay.
Yeah.
And
well, that's one of the benefits of how slow it moves, actually,
Right.
because it is a slow mover. So I got in a couple late. Actually, one of them I got in the next morning that I missed. It was about a penny different. I got in the next morning, and it was still. These examples are all based on $2,500, Lisa. So average trade is going to be in that 18 to 19% ROI, which keep in mind, I think people should understand this. We're talking about
another thing that was amazing to me is sort of like if you look at the trade when it sets up, you're buying it at such a discount to the real value of it. And so the only thing that you need is to stay in the green room and the time to click off. And one thing we know about time, right, folks? It keeps moving. So that time is working for you now instead of against you with options. You got to love that part.
Well, I think the 18% average win is really juicy. We're talking about an asset that's very boring, to be honest. It doesn't move a whole lot. And we're talking about one-day trades. So a lot of people think, 18%, that's pretty good. And they're thinking like a 2-week, like an income machine try, like I would do. We're talking guys like 1 day, flipping around and making 18% in 1 day on that asset. I think that's really, really attractive, especially then if you factor in the part that you're not taking a full loss when you're wrong. And so like this, if I have to pick my favorite thing in the whole presentation, Tom, it's got to be this, right? I mean, you looking at this and how those wins can stack up when you have mitigated losses makes all the difference in the world to a real trader. And I'm sure you guys have experienced exactly what I'm talking about. Because I trade a lot of income, and a lot of times when I lose a full 100%, right? I risk $1,000, I make 200. I risk 1,000, I make 250. I risk 1,000, I make 210. But then I risk 1,000, I lose 1,000. So that difference in what you're losing really makes a big difference. So I think that part.
I love the risk mitigation. In fact, because of the risk mitigation, it allows you to trade, based on a level number. After you get confident with it, you can take that up. And once you get You'll go through about 10 of these trades and say, hey, maybe I want to increase that allocation because this does work the way it was said it worked over enough trades. The numbers work for you, make it work for you. I just want everybody here that, that goes through the heartburn like we had last week, to have, be able to sit there. If it happens again with that heartburn, you look over your anchor trade and it hadn't moved, you go, boy, that's a good trade. That's what you're going to say. I guarantee you that's what you're going to say as a trader. Oh, that's a good one. Okay.
Tom, this is awesome. I had some, some kind of little previews of what this was going to be tonight, but this is even better than what I knew about, what I thought was coming down the pipeline here. So congratulations on this. This is so cool. And the fact that it's just fully automated and everything. Also, with everything I know that was put into developing this, I don't know how you convinced Nathan to put the price so low, but folks, if you're at all interested in this program, I would grab it at this price, 1,000%. And somebody asked about, what about VIP lifetime? So on the second page, folks, if you take the 445 offer online, on the second page, you can upgrade to the VIP for another 445. So for under $1,000, actually under $900, you're getting lifetime access to these daily alerts. So that's just an incredible deal. A couple of questions, if I can throw at you, Tom, that were popular in the chat.
Sure.
These are daily trades. How often is the criteria met that there's actually a trade?
Usually it's about, like Nate said, about 5 trades a month, which doesn't sound like a lot of trading, but that's okay if your account's growing with the 5 trades. And that's what I'm talking about. You start out maybe small, and you say, well, look, if I'm going to do 5 trades, you get confidence on it. You can increase your exposure as you get the confidence grows, as you see how it works. It's not a complicated strategy, folks. You buy it at a discount and you cash out at retail. That's the beautiful thing about this. And all you got to do is stay in the green room. You're going to make money. And what's so beautiful about what Nate put together and Jonathan put together is it's so simple to read. I didn't call Nate and said, how do I read this? I didn't call Jonathan, hey, what is this telling me? Hey, buy this option, be bullish. That told me it was need to be, it's going up, and this is the target I'm entering, or this is where I'm entering, and this is where I'm exiting, the time I'm exiting. Love it.
Awesome. Couple other questions. So do they, if I remember correctly, they have a choice kind of how they play this. They can set a target, or they can just let it ride till expiration, right? You're going to teach them both methods?
I'm going to spend a master class and show you the benefits of doing either way. It's always the player's choice, the way we do it, and so it'd be up to you. You'll have both. Why you want to do it one way versus another? Personally, let me just tell you this: if I pay 80 cents for something and I can sell it at 97%, I'm not going to stay for the last 3 cents. Okay?
Yeah.
I'm not going to do it. I'll take that 80 cents and wait for another anchor to come along.
Now, for the people who asked about the day trading rule and stuff like that, if they're worried about that, first of all, you aren't doing it that often that if this is the only one you're worried about, they don't even have to worry about it.
This is not a day trade strategy. I would call this as a time strategy. It's a time for anybody out there that's lost money to have a diversified way to make money when maybe they're losing money with their main strategy or whatever. This is a diversified way. It's not a day trade. It's playing in the bond market. And the thing I like about the TLT, it's a lot easier to understand the TLT from 80 to 81 than it is the bond market, 30 seconds and, the 64ths and all the stuff you got to learn on the future side of the bond market. This is simple, like a stock, okay?
This is a stock trader's way to trade bonds, right?
It really is. That's a good way to say it. It's a stock trader's way to trade something that I trade a lot of, which is bonds. In fact, my mind was thinking, and I'll tell Nate this, people know I teach futures, but my mind was thinking, I think I'm going to do this trade on the futures also to have a little bit more, race car type approach, because this is a heck of a trade with the TLT. Heck of a trade.
Now, do they have to worry about assignment with TLT?
It depends, and I'll explain that in the master class, okay? Because the master class will give everybody benefits or ever how you want to handle it.
Gotcha.
And I would say if you guys are worried about the assignment, which of course, if you're trading any kind of income thing, you got to think about it. I would recommend doing the debit spread, which is kind of the default version. Tom will teach you every which way to do it. But if you're worried about it, do the debit spread version, because then if you get assigned early, you just get an even bigger profit than you were planning on. But go through one master class with Tom, you'll be all set. You won't have any concerns about.
I promise you, if you're a new trader, if you're a experienced trader, you got any questions at all, take a run with me here, because people will tell you in an hour's time, I will give you, and Jonathan will help me do this. We will put together all those questions, all those answers where you'll have that moved away from your mind, okay? Because this is a simple get in here and out there the next day.
And let me just tell people, because I snuck a peek into the members area. If you're worried about, are you going to be able to learn this? There's all kinds of training in there. There's a strategy guide related to anchor trades. There's a separate video for the debit spreads when we're bullish. There's a separate video for the debit spreads when we're bearish. There's an introduction to bonds. There's a 30x TLT trade that we're not even going to even tell you what's in there. It's a surprise. And then if you're brand new to options, there's Options Made Simple, which is basically a beginner guide to options where you can start from the bottom. You can start with that and then take the strategy training on top of that if you're new to options. So, and then of course you have access to Tom's Telegram, his regular Telegram, plus the dedicated Telegram for this program. So there's a lot in there. And then of course you have our incredible support team, email support, phone support, our customer service live, doing live Zooms 3 hours a day, 5 days a week, all kinds of stuff available to you in the way of support. So this is just really, really cool. There was one question about how time sensitive the trade is getting into it. If they're not available between 12 and 1, how much time do they have to get into the trade?
By the end of the day at the price, Nate already gave it where he missed the trade on the time it was entered and made it the next morning. It was off 1 penny.
Yeah, 1 penny difference is what I paid.
This is sort of like, let me describe the bond market this way. The bond market is your money fund that you have at the bank, okay? It's stable, right? It's at $1. The only difference here is it will move a little bit, okay, from that level. And a little bit means less than $1, okay, on most days, unless it goes off the rails, you have one of those crazy days. And you can always have that. But the point is the TLT might be, until I come up with this strategy, the TLT might be the most boring ticker in the world to trade short term. Welcome to boredom. Money comes in your pocket. Who cares about being bored when you're making money, right? That's what I'm thinking to myself. I need to be more bored like this. You know what I'm saying? This is not a show out trade. This is a grind of when it happens, you're able to follow the simple instructions. It's automatically done for you, so you don't have to wait for me to tell Jonathan, send out the trade. It's right there in that Telegram channel as it posts and tells you the details of it on it, okay?
I'm going to give you my stupid analogy. What you've done, or metaphor, I guess, what you've done is you've put a shiny gloss on beige.
Yeah.
You've taken beige and you've made it shiny. You've made it exciting.
Well, for income trading, I mean, for people, you can let me know in the chat. How many of you guys in here kind of consider yourself income traders? You like the income style, you like the higher probability versus directional? Because for most income traders, you like boring. You like the things that you feel like you get into and there's, you're not panicking all week long, hoping that it stays above that line in the sand. And so for TLT, it obviously plays into that. And I really think the heads up thing is really nice, as I've been following it now that I have access to the Telegram. A lot of strategies, you're kind of wondering, are we going to get in? Why didn't it trigger today? Why did I get an alert today? Well, now you know exactly why. Every day you know exactly what happened. Here's where it's at. Here's the level it needs to fire. It actually gives you the options right there. Like ahead of time, it says, here are the options that we should be using. So you can set them up on your brokerage, kind of save them if you want. It's really easy. I mean, simple, boring, easy, all those good words that we like to use about income. I think it checks most of those boxes. And I think the best thing is, Tom, of all, is that Penn State is winning 17-3. So we got
There
nice.
you go, Nate. Everything's
Nice.
going our way.
Everything's
We couldn't
going our
ask
way.
For a better sign for the night to join
Bonus.
and make it happen.
Look at that. I'm going to steal the screen from you for a second, Nate, because I want to show people how easy it is, because we have a few people that seem to be worried about the whole Telegram aspect. Telegram is super, super easy. When you get in the members area here, this is what it's going to look like. And the very first thing on here is Telegram access. And there's a guide in there that there are two things in there. There's a link to the Anchor Trades Telegram channel, but there's also a link to a guide that shows you exactly how to sign up for Telegram if you want. And it's a free program. You can put it on your computer, on your tablet, or on your phone, whether you have an iPhone or you have an Android. As long as you don't have, a 1982 flip phone, you can put it on your phone as well. And it's just a messaging program. It's just a messaging program, but it allows Tom and the automated system, to send these alerts out to you with no delay whatsoever, and with all the information in there. It doesn't chop it up into 200 characters per message or any of that garbage. So that's why we use Telegram. It's reliable, it's fast, and it lets us put all the information in one message. Here's the other stuff while I'm here that you get in the members area. Let me zoom out a little bit here. So you get, again, the strategy guide. You get the setup on the bullish debit spreads. There's also a third one in here for the bearish debit spreads. And then you get the introduction to bonds, you get the 30x TLT trades, you get the option made simple course, and Tom's other general Telegram channel. So you get all of that stuff with even if you just join for the 1 year, you're going to get all that stuff. But if you want access to it forever, you want to take the lifetime for sure. So that's my recommendation with the deal that you have today, to go for that price on the VIP and not have to, because if you join for a year at $445, that's a fantastic deal. But a year from now, if you want to keep doing this, if you're planning to trade for more than a year from now, you're going to have to renew at whatever the price is then. And I'm guessing it's going to be $29.97. So
I would tell you after we put a month with all these people that are joining, that price is ridiculously low. $445 for this. This is so valuable. I mean, think about this. Maybe you think the market's going up, which I do. I think it's going to go higher, right? And there haven't been two down weeks in a row since April, right? People work with me know that, right? So next week should be a good week. But think if it's not up. Anchor is a diversification against that normal trend and seasonality next week. So you've got this in your pocket, and then you can build it as you grow your account. You could be in such a situation by allocation, money allocation. It doesn't need to trade 100 times. 5 trades a month on something that you got confidence in, something that you know and seen work, after 20 or 30 of these, then you can step it up and you say, okay, maybe I'm going to allocate a little bit more money into Anchor. Okay. I can see this being a very stable part. If you like dividends, I know a lot of people like dividend stocks, right? This thing is so good that you don't have to worry about the depreciation of the asset that's paying the dividends. It's a grind. It's just grinding. And here's the other thought process. The 15X trade that he's talking about, it doesn't just have to be bought this week. You can keep adding to that position with some portion of what you're grinding out with the Anchor. You see how I would do it? Maybe you start out putting $100 in. Week later, 2 weeks later, you made a couple thousand. Maybe you put $200 in. You see how that works? That's called pyramiding your profits. I'll give you that in the master class when we get there.
Yeah, it's a way to more rapidly grow your account, and there's all kinds of tricks of the trade that Tom can teach you, because he's been doing this for a couple of minutes. Would you say, Tom, you've been doing this for a couple of minutes?
This trade here?
No, trading. You've been trading for a few minutes in life, right?
Actually, my hair used to be black, and it's turned sort of a blondish color now, blondish gray. It's turning back, it's turning back black. I'm going back in time. We heard Saturday Night Live tonight for the first time in all those years, right?
Nice. A little disco music to put some color in your hair.
Right.
I wish that would work for me, Tom.
Yeah, the beautiful thing about it too, somebody asked this question and I'll answer it. The spread on the bid and ask on the will handle volume. So that's not an issue with this particular ticker, which is beautiful for people that like to leverage up a little bit.
Somebody earlier, actually at the very beginning of the webinar, said you had great hair, and I didn't want to start a conversation about that because I didn't want Nathan to feel bad. He usually gets the compliments on his hair. Somehow it's never me.
He's got a dude, doesn't he?
Somehow it's never me. I'm not sure why.
They're not talking about your hair, are they?
What was that compliment I got on Friday, Dave? I got some back
for your hair or the other one.
No, it was something like I'm smart even.
It was that Nate's pretty smart for somebody who went to Penn State.
Oh, is that what it was?
Yeah, that's what it was.
I thought I was pretty smart for something related to Kane. But I couldn't remember exactly. Or maybe it was just Kane is smart, but I'm smart.
Kane is smart with no parameters.
No parameters. Got it.
Yeah,
okay.
No parameters. You're smart for somebody who went to Penn State, and I'm smart for somebody who's lost most of their mind. But nobody mentioned that. All right, thanks, iPad. Nice beard, Dave. I got something. I got a hair-related compliment. It's my year. Okay. Well, getting back to the program, I've got the screen share. If you guys need to jump, I can stick around and just kind of recap. I think we got most of the non-Penn State related questions answered. You got any closing remarks there, Tom?
Yeah, I do. Somebody said, hey, do we have a 14-day trial with this? If they buy it tonight, do they get 14? Yeah, absolutely. But you got to pay me half the money you made during the 4 if you just don't like making money, okay? That's a caveat. Anyway, just kidding, of course. But anyway, thank you so much, Nate. For my first webinar as a rookie, I sort of enjoyed this on Saturday night, and always being around you and Dave, and y'all did a lot of work putting this together for everybody to have. Take advantage of it. Take advantage of it. Take advantage of it.
Perfect. Thanks again, Tom.
Sidelines.
Thanks for doing it at such a crazy price. So it kind of puts it in context for anyone. I think that's one of the beauties of it, right? It's $80 a contract, so pretty much anyone can trade it. But then you got to make it cheap enough to get in, so anyone can trade it. Well, $445. I think you did that. So thanks for doing it and making it accessible. Hope everyone takes advantage, and I'll be trading these next week with you guys. So hopefully get some good triggers, and I'm looking forward to the opportunities.
Awesome.
Sound like a plan.
Thanks,
have
guys.
A great night, folks. See everybody tomorrow night at Sunday night.
All right. Well, folks, if you still have questions, stick around because I'll be here for a few more minutes to answer them. If you have a question that didn't get answered, please drop it in the chat again. It means it kind of scrolled by and we missed it. Frank, there's no trial like per se where you can start using this right away without a purchase. There is a 14-day money back guarantee. If for any reason you don't like it, even if you've made money with it for the last 13, 14 days, you can still get your money back. So at $445, the risk is about as low as we can possibly make it. I never see any of your programs that are this involved in putting money into them and developing them go for $445. So at that price, there's no free trial. There is the money back guarantee if that's what you want to do. Let's see what else. Thank you, Melinda. So if anybody missed the presentation or they want to see it again, you can drop your name and email address in the chat. I'm the only one who'll see it. We'll give it to our team to get a message out to you with a replay link as soon as it's available, which should be in a few hours. If you already did that, I have a few people's email addresses already. Melinda, Wendy, Jason, you don't need to do it again. Anybody else, if you want to replay, go ahead and drop it in now, name and email, and we'll get that out to you. Hopefully tonight. If not, we'll do it tomorrow morning. Let's see. Does TLT move too little to trade most days? Well, we kind of have designed the trade based on the fact that it doesn't move very much. So granted, we don't have a qualifying trade every day, but we know like the whole idea of this is that this is kind of a boring stock, and and Tom found a way to take advantage of the stability of it rather than what we normally look for in stuff is the volatility of things. Here we're looking for the stability of it. And so that actually works in our favor with the way he's designed this trade. And then Nathan was able to help him automate this so we can get these trades out to you as soon as the criteria is met in the middle of the day. Let's see what else we got here. The basis for the trade is it's a little complicated to re-explain the whole presentation per se, but we have this very stable stock that's based on the bonds, the bond market, which is usually very complex to trade. And here we have a way to trade it not just once a year, but like on a regular basis, a little more than weekly with options on. So just to give you a little more detail, it doesn't matter if you don't really understand it, folks, but we have the bond market. Then we have what are called ETFs. These are exchange traded funds that trade on the stock market. And now we're taking options on those exchange traded funds to take advantage of this strategy that Tom has put together. So it's kind of multi-layered, but you really only have to worry about the one thing. He gives you that trade alert. We're buying this and selling that, and that's all you have to worry about, those two pieces. Once you get used to it, once you know how to do it, it takes maybe 60 seconds to place the trade every day. And then only in a rare circumstance do you have to worry about when it's going to close or anything like that. Tom's going to give you two different strategies on how to do the exits. You can literally do nothing after getting in them, or you can immediately set an exit order if you want to try and get out early with a partial profit. And he's going to go over the pros and cons of each of those methodologies with you in the training, in the master class. All right, let's see what else we got. So Sherry, I may have just answered your question, but just in case I didn't, yes, we're trading something that's based on the bond market, but we're trading options that trade on the stock market. So you don't have to worry about whether you have approval for bonds or whether you have a broker that does bonds. We are not directly trading bonds. We're trading what's considered a derivative of bonds or something that trades off of bonds. So they're options that trade on the regular stock market, just like an option on Amazon or Intel or NVIDIA. All right, everybody who's sending in their email addresses, I'm not going to have a chance right now while I'm talking to respond to you, but I will get them on. We'll get those emails out to you. Ashay, you said, can I put the link in the chat? The link to join, is that what you're looking for? Because like we've dropped it a few times, but I guess if you just got here, then you may not have it. Let me drop it again. So this is the link to join. Boop. That was me booping. I don't know why. All right. I don't have a date on the master class. Adam, if you're listening and you know the date of the master class, can you Slack me and I'll drop it in here yourself? But I don't know if it's been scheduled yet. I think they were waiting to see when we got a bunch of people in here. I wasn't given the date. Yeah. Okay, perfect. So the week after Thanksgiving, first week of December. Perfect. Perfect. Thank you. All right. Susan, no, Nathan's not part of the service. He helped develop it with Tom. Tom came up with the strategy, I believe, and Nathan helped him backtest it and then automate it, I believe was how it went down. But it's Tom's service. It's not something that's going to be Nathan's. Nathan, link to the third Jumpstart course. I'll direct message you in a second. All right. Let me see what else we got. So Susan, no, not so. It's yes, it's 1 to 2 trades per week. He said on average it's 5 a month. So it's basically weekly with an extra trade here or there. I don't want to set your expectations incorrectly. It's basically weekly. It could be any day of the week because he's basically checking this every single trading day, and then it's just about 5 a month that it's been averaging where the market qualifies, where the conditions are met. So it could be 2 or 3 in 1 week, and then you might skip a week or two, but it's on average, it's five per month. Let's see. Lost my place here a little bit, so let me go back. Okay, we got that one. Is Telegram the only way we get the trades? Yes. You want to make sure that you have the Telegram channel. They're only going to be in Telegram. The system automatically connects to Telegram and posts the trades. So please, when you join, go into that members area, click on that very first thing in the members area right at the top to join the Anchor Trades Telegram channel. Very important. Even if you don't join Tom's general one, which if you're trading with Tom, I highly suggest you do anyway, but definitely do the Anchor Trades Telegram channel, or you're just going to have the training and no trade wrecks. Let's see what else we got. All right, Roger, that's a kind of a long message. I'll read that in a minute. Let me see if there are any other any other questions about the program. David, as far as the number of contracts and all of that go, that'll all be in the training. Don't worry too much about the contracts. You'll see what the cost of each contract is. It's about $80. So you would just divide however much you're looking to spend by whatever the current price of the contract is. They are going to vary a little, so the number of contracts will vary a little. But you just divide however much you're looking to spend by whatever the price of the contract is. So say $80 on average, and that's what you would you would spend. So if you're looking to risk $1,000, and keep in mind we usually don't take full losses on these. But of course, anything is possible. You should know the risks. So if you're looking to put $1,000 into it, if my math is correct, that's about 12 trades. 12 contracts, and then you can just kind of multiply from there. Yes, Pierre, it can be done on any platform where you have permission to trade option spreads. Let me, for those that trade options but haven't done spreads, we actually have a guide to the different levels of spread permissions and how to get them in your account. Let me drop that in here for you guys. If you don't currently have these permissions in your account and maybe don't even know what we mean by that, grab this guide. This is just a couple of page PDF that explains what we're talking about and how to ask for those permissions in your account. The reason you need permissions to do it is a little weird. It's just these like kind of more arcane rules that are in our brokerage platforms. We wish they would just let people trade however they want to trade. The reason is that it's twofold. One, they make less money when you trade it as a spread. So they want fewer people trading spreads, and they'd rather everybody just buy basic options all the time. They make more money. The other reason is it's a little more complex to put a spread concept, a spread trade together. So if you put it together wrong, you could be risking a loss just because you constructed the trade incorrectly. But Tom's doing all that work for you. The system is putting those details in Telegram for you, so you'll know exactly what to buy and sell. So he's taken the complex part out of it. Spreads are actually less risky than just taking a regular call or a regular put once you have a proper trade construction. So Tom's doing the trade construction for you. You wind up with a less risky trade, and you save money on it as well. You just have to get your broker to agree to let you do it and spend less money with them. So that's the gist of the 5-page document I just sent you, but it'll also tell you how to get those permissions. So they could be calls or puts. It depends on which way he sees TLT going. So they could be calls or puts. They are always going to be vertical debit spreads, but it could be calls or puts. Bob, you asked for a replay, but you sent me your phone number. I need your email address, please. Bob, who sent me the phone number starting with 954, please send me your email address. So Pierre, in case I didn't fully answer you, yes, you can do it on any major broker that lets you trade stocks and options. As long as you have those permissions in your account, you can do that. You can use Charles Schwab. You can use tastytrade, Maria. Susan, so it could be like 1 to 2 a week on average. Like I said, it's 5 a month, which is 1 to 2 a week overall. The masterclass will be the first week of December. We don't have an exact date and time. Let's see what else we got. Boom, boom, boom. The service is already live, William. You don't have to wait for the master class for the service to go live. If the training is sufficient for you and you understand how to take the trades, you do not have to wait for the master class. So this is already live. This is already happening. It just wasn't open to the public. It was open to our small group of beta testers. And now we're making it available to the public, but the system is already live. We're not waiting for like development to finish or anything like that. It is live. You just don't have access to it until you join. Once you join, you'll start getting those Telegram alerts every day telling you what we're looking for and then letting you know whether there's a trade or not. If the training in the members area still leaves you with questions and you're not sure what to do when you get the alert, you can either wait for the master class to start trading it, or you can contact support and they'll be able to help you in advance. So it's up to you whether you wait till the master class, but the system is live. David, it will not work in most cash accounts, I think, because I think most brokers will not let you take spreads in a cash account. Now, it doesn't mean that you have to use margin. It just means you have to have a margin account. I'm not aware of one that lets you take it in a cash account, so I can't say with 100% certainty that that's not true, or that you can do. I can't say with 100% certainty that you must have margin with every broker. I just don't know of one that would let you do it in a cash account. Yes, trade. So Rob says trades last 1 day or 2 days. The way I calculate it, it's 1 day. It's the following day. They expire the following day. So we call them 1 DTE options, 1 days till expiration options. So if you buy it on a Monday, that close is done by 4 p.m. Tuesday, no matter what. You can't possibly be in it past 4 o'clock the next day, the next trading day. It's possible you'll get out sooner if you choose to use a strategy where you set a target. But if you just decide the strategy to let them ride to expiration for full profit, then it would expire the following day at 4 p.m. So at most, you're in 2 of these trades at a time. So if you were to get a trade on Monday, these trades happen between 12:05 or noonish and 1 p.m. each trading day. If you were to get the trade at 12:30 on a Monday, and then you were using the exit strategy to ride them till expiration, then you would definitely still be in it the next day on Tuesday when you get that day's trade between 12:05 and 1 p.m. But at the end of that second day, at the end of the day, Tuesday, you are absolutely out of Monday's trade. So by the time Wednesday comes, you're only in Tuesdays when you take Wednesday's trade. And then by the time Thursday comes, you're out of Tuesday and you're in. So you're always, if you're riding them till expiration, you'll be in 2 trades at a time each day. So keep that in mind when you're thinking about how much of my trading account do I want to allocate toward this trading strategy. That if you're going to let them run till expiration, and even if you're going to set targets, you may still wind up in some days you may not hit your target before the next trade comes out. So I would still plan on the fact that you may be in 2 of these trades at a time. However, they don't come out every single day. So if, being that, it's not that common that they're going to be 2 days in a row, personally, I would be fine putting however much I'm willing to allocate onto this program. I'd be fine putting that full amount onto each trade. And then once every several weeks, if the next trade happens to come out the next day, then I just skip it. Then I just know, well, I can't take that one because I'm still in the first one, assuming I'm still in it. So, I would personally say I wouldn't worry too much about them stacking up on each other, because it's not going to happen very often. It might happen a few times a year. And in those circumstances, if you set a target, you might be out of it already the second day. And if not, then you just skip that one trade that because you're already fully invested in this strategy to your personal maximum. Yes, the wins that were shown in the slide deck were based on a $2,500 trade. Where's the tutorial posted on this? The tutorial is in the members area. It's in our platform called One Click Trading. That's where all of Tom's programs are. So if you're in any of Tom's programs, it's in the same place. Once you purchase, you'll have access to this area of One Click Trading, the Anchor Trades area of One Click Trading, and all the training is in there. And then once we schedule the masterclass, there'll be a link in there for that as well. Yes. Oh yeah, heck yeah. 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 Go for it. Adam's going to give us a sneak preview of Telegram. All right, let me get to another question while you're doing that. How long have we been doing that, and how many participants do we have? Well, I know it's been a few months. Do you know the answer to the participants, Adam? How many people have been trading it so far? Okay. Well, I know Tom's been testing this for a few months, but we only had people actually trading it this week, and it was just the people that have Diamond, which is like they have every program. So, yep, full Telegram screen. You might want to zoom in now. Can you zoom in at all on that or no? I don't know. I can't remember if it lets you zoom. Just grab that portion. Yeah, it was just a little small. We could see it but couldn't read it, unless it's just me. To answer the question, what's the average loss? It's going to depend on which exit strategy you use and how you set your targets. So it's going to be different for everybody, and he's going to go over that. Oh, that's perfect, Adam. He's going to go over that in the master class about the pros and cons of where to set your targets or to ride it out for full profit. And so the average loss is going to vary based on that, but he'll go over that in the master class. And yes, we're only trading TLT. Go ahead, Adam. Mm-hmm. So, yeah, so first of all, let me just say, people do not take this trade that's on the screen. This is several days old. I mean, of course, today's Saturday, but don't even enter it for Monday. This is old, so don't take this. But so the first one, the one with the black background, they're going to get that at 12:05 exactly every day, kind of prepping them for what's coming down the pipeline if conditions are met. And then we can see at exactly 1 o'clock, the actual trade alert went out and said, we have a short signal, buy this put, sell that put, and so on. Perfect. So before they even get the alert, they can even like set it up in their brokerage platform and just not hit go until they get the alert. Oh, that's awesome. That's more than a heads up. That's like detailed instructions with a please hold sign on them. Awesome. And you can see folks there, it tells you which direction we're going so you know whether you're putting in a short or bearish or a long bullish trade. We know what basically you're buying, and this is what a vertical debit spread looks like. You're buying one put and selling another put, or buying one call and selling another call. And this came out on November 18th, which I don't even have to look at the date on the top of the screen because I know it's on the 18th because well, it says date right at the top of the alert, but the expiration date on the options is the 19th. So we're always buying and selling options that expire on the following day. So we do that. This is a net debit of 85 cents per share, which means It's $85 per contract. Your investment in each contract would be $85. So that would be that. And if you pay fees for your trades, it would just be that. Plus the fees is all the money you would need to place this trade if you just did one contract. And of course, you can multiply that out to as many contracts as you want to do. The volume and everything on TLT is tremendous. So there's not going to be, it's not like, oh, you'll never get your